up, HyperChange? Welcome to another episode. Today we're going to talk about Tesla. As you guys know, I'm a Tesla shareholder, really bullish on the company. I think they have incredible potential the next 5-10 years. I think the flip side of that also doesn't get enough attention, especially from people like me, Tesla shareholders, is that the company is still more or less a startup in terms of how much the vision is yet to play out, in terms of how mature the business model is, and how close they are to getting to that sustained level of profitability that you'd probably like to see from a safe blue chip company. Like, we're still a couple years out. Combine that with the fact that they're in a business, the automotive business, which is incredibly capital intensive. It's no coincidence that during 2008, we saw all of these automakers go bankrupt. There's a strong correlation with new vehicle sales and economic recession. So if a recession hits, then global vehicle sales are likely to plummet. And this won't be at the fault of Tesla, but if this happens, Tesla's Model S and X sales probably will fall pretty precipitously from the current run rate of about 100,000 units per year. I would guess they could even get cut in half. I think it's really important to highlight the fact that, like, with all this political turmoil, with the Fed raising rates for the first time in 9 years, with the fact that we haven't had a recession in 9 or 10 years, like, I think it's at least worth playing out the scenario of what were to happen to Tesla if a major recession hit tomorrow. Basically, where I'm at in my head is Tesla is going to need to raise capital, and they are going to be in a lot of trouble if a recession hits before they can really ramp Model 3 production. Because right now, the company is spending like crazy. The core business itself was profitable for 1 quarter during 2016, but that was when they halted all spending. For the year on the whole, they lost about $667 million in terms of operating profit. But additionally, they've been investing significant CapEx to build out the infrastructure to be able to meet demand for the Model 3. They've even said that they plan to spend $2 to $2.5 billion in the first half of this year just to get their factory and production ready for Model 3. So as you can see, there is just a massive need for capital for Tesla to get this production off the ground. That's why they just raised about $1 billion, most of it in debt, some of it in stock, which makes them a little bit safer, but frankly, I don't think the cushion's enough. Because what's gonna happen if a recession hits is Model S and X sales are gonna dry up overnight. Let's call it they get cut in half by 50%. I wanna be realistic as possible with this. Unit sales go down to 5,000 per year. That operating loss that we saw of about 667 million, I want to say goes up to $1 billion. If they're only selling 50,000 cars per year, they'll try and curb sub-spending, but I just don't think there's a way you can get around with Tesla's business bleeding cash. Model 3 demand will shrink dramatically as well. Our projection of 500,000 plus units per year in a normal economy, let's say that gets cut in half to 250,000, like all of a sudden Tesla's business overnight is going to go from something that looked like it could have done 35 billion with S and X doing 10 billion and Model 3 doing 25 to now it's doing 17 billion. So with the market cap here at 55, like, it's easy to see Tesla's share price for me getting cut in half, just like the vehicle sales are going to get cut in half. Let's play this out a little bit. Vehicle sales are declining. They've figured out how to build the Model 3, but they can't build enough of them to really do it at scale, to do it as profitably as they want. So they're burning money every single quarter. That cushion that they just raised, they're running through. Now Tesla, with their share price cut in half, is going to need to raise capital. Car sales are coming down, all growth companies are coming down, the entire stock market is coming down, Tesla's price sales valuation comes down, their sales themselves are coming down, so you have like this double whammy effect. The share price could go down significantly more than 50%, in fact, because then you have this added psychology of the market knowing that Tesla will need to raise capital, and therefore they're going to be pressuring the company, and probably short sellers will continue to pounce on the stock and drive shares lower, given that they know that Tesla will need to raise capital. And that's where the real risk comes in, is Tesla is going to have a very depressed share price because of this collapse of the global automotive market, and they'll need to raise money at the same time to keep the lights on. Tesla would have to raise probably at least another, okay, so if we assume they're burning about $1 billion a year just from S and X and they have Model 3, like, they're burning, let's say, between $1 to $2 billion a year in this recession mode. So if a recession lasts for a year, even if they put all growth plans on hold, they still are probably going to need to raise an extra $1 billion or $2 billion, which doesn't seem bad with their market cap at 50 billion now. Okay, that's only like 5% dilution in a worst case. But let's say their market cap shrinks to 20 billion. Now you have to raise $2 billion, that's 10% dilution. Let's say they're only at 10 billion market cap and they need to raise $2 billion, that's 20%. So you can just see how the dilution can play out and potentially permanently impact the upside of Tesla shares if it happens at like the worst possible time. And even worse than that, I think it's worth noting that if they can't raise capital at all, they'll go bankrupt. You know, it's not that crazy. Like, all these other well-established auto companies went bankrupt in the last recession, and Tesla's in startup mode. They weren't in startup mode. Easy to see Tesla going bankrupt if they can't raise capital when a recession hits, and even if they do raise capital, it's not going to be on their terms, and it probably will be significantly dilutive. And combine that with the fact that Tesla is pretty unstable from a balance sheet perspective. They have about $7.5 billion in long-term debt. So I went through their 10K filing, added up all the unpaid principal that's due before the end of 2019. You guys can check it out here. All you need to know is that it adds up to about $3.3 billion by my totals. Not only in the next year and a half is Tesla's auto business likely to remain unprofitable, but they're also gonna have $3.3 billion in debt to either repay or refinance. Now we have like this real worst case scenario where a tailspin's happen in Tesla's share price, and then they're forced to raise capital because their core business is bleeding money, so they need to raise capital not only to support their core business, but they also need to raise capital to pay off this $3 billion in debt. We could have Tesla's cash flow needs balloon to $5 billion. Let's say their market cap's $20 billion, or that's 25% dilution. And that's assuming they get the money. Otherwise, they're going bankrupt. I guess to sum it up, my point is Tesla's really like a startup. I think it's really important to think through both sides of your investment. And although Tesla has an incredible amount of upside and exciting potential, there's also significant risk at its current point in the business model. They're not profitable yet. They still have incredible amounts of capital needs to get to the point where their business is going to be sustainably profitable. If a recession were to hit, it would be awful timing, and it would really cripple the company given they're such a kind of a fragile part in their growth curve. And although I think they're in a much better place than they were in 2008 when they almost went bankrupt, the risk is still there. And Elon is so ambitious and growing this thing so quickly that the flip side of that is they don't have much of a cushion. That all being said, if you're listening to Warren Buffett or Peter Lynch, they will never try and predict a recession. I don't try and predict recessions either. That's why I just stay invested in Tesla, even though I know that there is massive risk in the business now. And if a recession does hit now, I'm probably going to lose a lot of money. But I don't want to try and predict not selling my stock or doing anything about it, but I know that risk is there. And why am I okay with that risk? Because I think the potential of Tesla's upside more than justifies it. Let's say there's a 50-50% chance they go bankrupt because they're not stable enough. 50-50, I lose all my money. What's the upside if they don't go bankrupt and accomplish all these goals that Elon Musk has as they pioneer this transition to electric vehicles and batteries in a sustainable grid? I really believe in that future and think there's a $500 billion, beast, energy, automotive, futuristic tech giant within Tesla, but getting there is going to be tricky. But I think, we're worth 50 billion now. So if I see this vision for 500 billion, that's 10% upside. So right now I look at it as this dichotomy of 50% chance Tesla goes bankrupt, I lose all my money, 50% chance I make 10x my money. I will take that bet. It makes sense for me and my risk tolerance to be a Tesla shareholder today. Recessions happen, so it's important to think through what will happen to your investments if the worst case scenario happens, because you got to be prepared. A gut check for all you Tesla shareholders. Maybe if you're a Tesla short, you love this video because I, showed Tesla's Achilles heel. But the bottom line is auto companies require billions in capital. If a recession hits before Tesla has achieve sustained profitability, they will need to go back to the markets and raise more, and this will either result in significant dilution if they can successfully raise, or it will mean bankruptcy if they cannot successfully raise. Anyway, see you guys next time. That's HyperChange. Hope I didn't make you Tesla bulls too sad. Peace.